my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A shooting star pattern yesterday and also a small bearish black crow. It was further evidence of the current predicament of the market. It is being squished by the two downtrends overhead of the 2008 to date move, currently at 122.30, and a 2011 to date move, currently at 122.40, and from below by the lower bull channel line, currently 122.14. Yes, they saw the market trying to get out of this predicament on the top side, but seemingly unable to do so. Question now is whether the shooting star pattern is a type 1 bearish, the most common type of shooting star pattern, or whether it is a type 2 bullish, a rarer variety. This recent jumble of events and reactionary moves will come to an end this week, as the space for manoeuvre is now very limited. But at the moment it seems neither the bull channel nor the downtrends have the ascendancy. However, so far today, an initial cautionary move lower, weighed in on being the more common type 1 bearish shooting star pattern yesterday, but then the market has accelerated its move lower, down towards a short moving average currently at 121.76 and the significant March low at 121.52. It all depends on where we close tonight. Cable, aka sterling against the US dollar. A swift and one could say a nuclear approach yesterday to the previous session's bullish engulfing pattern. Yesterday saw a combination of, now wait for it, a combination of a key reversal down, a bearish engulfing pattern, and a bearish closing black Mariposa. If that isn't a nuclear big red button response, then I don't know what is. However, in doing so, the market reached a height of 142.48, and this managed to just reach the target X at 142.45, the long listed and tantalizingly close for so long target with a double bottom pattern formed since mid-March. A full target X1 for the patterns in the 143.30 area, though I'm not as strongly minded about that one as I have been about target X. Anyway, yesterday's action ended up being the highest high and high open since 2018 as well. What is also interesting is that though the market managed to breach the last and most intransigent of the trio of overhead resistances, that's the March 2018 high at 142.43, it failed to close over it and then dropped down to the next of the trio, the now support at 141.43 to close the day. Just in case you've forgotten, the last of the trio is at 140.75. Overall, it seems the indecision we've seen in recent weeks, which I thought may be coming to an end, is still alive and well. We've seen the current bullish forces evident since September of last year still battle and rub up against the latest challenges seen overhead as the trio of the originally overhead resistances. The market continues to travel between the lower tie, currently at 139.04, together with its long-term partner, the medium moving average, currently 138.89, whilst above we have the middle tie, currently at 143.63. Both ties are from the June to September 2020 bullish shift pitchfall. Please always remember this pitchfall was given the bullish angle attack of this market since September of last year. Now, the only new feature seems to be how the short medium moving average, currently at 139.36, is now shadowing the lower time and its partner, the medium moving average. That's about the newest thing I think we've seen. As a postscript, this latest move up can be traced back to the overall move up can be traced back to the weekly key reversal up made 4 weeks ago. So far today, slightly higher open over the short, over the support and resistance at 143, as well as the short moving average, currently 141.41, but then the market has tested down below both of them very cautiously. There isn't really much support then until that one of the trio at 140.75, the last on the downside. Euro sterling. After a couple of days of indecision, we had a dramatic move up yesterday with a combined key reversal up and bullish engulfing pattern, if only just on the latter. However, all the market managed to achieve was a close back up over the short moving average, currently 86.09, and the short medium moving average, currently 86.23. and to go contrary, I suppose, to last week's weekly key reversal down. You see, we still have overhead the same rapidly descending medium moving average, currently at 86.66, and the April 2020 low, 86.69, both capping the market. Meanwhile, below we also still have the extension of the flat trend line from the March base, descending triangle, 85.45. Now, I've spoken for a while about a new, smaller pattern emerging, a possible small bear flag over the last 3 or 4 weeks. Nothing is for certain as yet, and whilst last week's weekly key reversal down helped, yesterday's daily key reversal up did not. Still hasn't triggered as an idea as yet. However, I still think it is worth considering, as we now have the medium moving average coming down to mix it with the market. This is enough to maintain the preliminary target X for such a pattern in the 85.20 area, just in case. So far today, nothing much as yet. We're either side of yesterday's close right now and resting on the short medium moving average. That's about it. US dollar against the Indian rupee. Bullish long white Mariposa and second bullish white soldier yesterday, as the market followed on from the previous session's bullish thrusting pattern. It's also a continuation of the reversion back up from the failed attempt to break down through the congestion zone below, oft mentioned, and stretching from the 50% Fibonacci line of the July 2019 to April 2020 move at 72.64, down to the February 2020 high at 72.05. Yesterday saw the market also punch up and close over the broken 2020 today uptrend, currently at 72.53, the broken 2018 today uptrend, currently 72.81, and finally the 50% Fibonacci line at 72.64. Now these uptrends will be reassigned after today's commentary. So far today, what looks like a bullish opening white Mariposa right now, opening up where we left off yesterday and riding higher. So far the market has, unsurprisingly, been capped by the flatlining medium moving average, currently at 73.29. Just above that we have the next resistance, the long moving average, currently at 73.47. It's worth noting that a pullback up may move as high as the 74.40 area and still keep the bearish incentive. However, there's a lot in the way between there and here. US dollar against the Brazilian real. Finally, a seeming move in the direction of the oft talked about bear flag pattern yesterday. We had a bearish opening black Mariposa yesterday that punched down through the key support in the 519.5 to 520.25 area and closed well below it. All this is coming after the weekly key reversal down last week, and is why we have a possible target X2 below for this pattern in the 508.40 area. I will also still keep target X1 below, a possible full target for the recent sideways triangle at 513.80. Further below? Well, further below we have seemingly little support, bar a lesser Fibonacci level at 510.87 until we reach target X2. It all now depends if this move lower can be sustained. We'll know later today. US dollar against the Mexican Peso. An attempt higher yesterday, the second within 3 days. That is, yesterday was a combined key reversal up and another hanging man pattern. Possibly, some might say, a second bull hammer, but I'm okay with that. Anyway, it has been the second key reversal up within 3 days, so I guess you may know where I'm going with this. The recent indecisive actions and pressure brought about by the market getting gently squeezed between the overhead neckline, currently at 20.0326 of the late February to early April head and shoulders top, whilst below we have the significant support congestion at 1971.68. All these have pushed the market higher towards testing the neckline. Further up we have the descending short medium moving average, currently at 20.1061, and the flatlining medium moving average, currently 20.22.5, which has actually capped recent efforts higher. This action now puts into doubt the potential targets from the previously mentioned head and shoulders top, and also the one from mid-January to late March. In the first case we have initial target X1 in the 19.5 area, with a full target X2 down in the 18.85.5 area. In the second case we have initial target X3 down in the 19.71.70 area, a full target X4 down in the 19 even area. The initial target X3 here has already been achieved. As I've stated, I'm still keeping these on my daily chart, but that decision may well be reviewed. So far today, a small dip towards a short moving average below, currently at 1991.67, but then a move back up higher towards the neckline again. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Service International Limited. And here comes the final bit.